Good morning and a happy Wednesday. Welcome to today's episode of Morning Well. Three things that we will talk about: earnings roundup, a Kodak moment again, and preview of the FOMC. US stocks fell Tuesday after some large American companies reported earnings that revealed an even larger hit from the virus pandemic than investors were expecting. Dow Jones was down 0.8%, the S&P 500 was down 0.6%, while the tech-heavy Nasdaq composite declined about 1.3%. The 10-year yields were down almost 4 basis points to under 0.58. The dollar was mixed against the G10 basket, with Kiwi among the hardest hit. Oil was slightly down, and Asian equity futures are pointing to a lower opening. Gold steadied after a record-breaking rally that saw futures touch about $2,000 an ounce for the first time. Goldman Sachs raised its 12-month forecast of gold to $2,300 from $2,000 and for silver to $30 from $22. In terms of earnings, a lot to digest, so let's go one by one. 3M shares slid about 4.8% after the manufacturer reported a drop in sales in the second quarter, driven by weakness in its transportation and healthcare segments, as businesses made fewer cars and planes and hospitals performed fewer elective procedures. McDonald's fell about 2.5% after the burger chain reported a deeper than expected decline in profit, as fewer people ate at restaurants and the company spent millions of dollars to help keep its franchises operating. Harley-Davidson shares slid about 0.8% after the company said the sales fell more than expected. Pfizer shares rose by 3.9% after the company's results beat expectations, and it raised its full-year outlook as well. Remember, the US has agreed to pay Pfizer and BioNTech nearly $2 billion to secure about 100 million doses of their experimental COVID-19 vaccine. Starbucks rose post-market after third quarter comparable sales fell 40%, slightly less than expected. The revenue beat as customers placed bigger orders even as they visited stores less regularly. It's reopened the vast majority of its locations globally and said it expects full-year comparable sales to fall to 12% to 17%. AMD also extended gains after giving strong forecasts, suggesting the company is gaining market share from Intel for server chips. Third quarter revenue will be about $2.55 billion, topping projections. Visa also slipped post-market after reporting spending that had dropped about 10% in its third fiscal quarter, even as lockdowns began to ease. Up next, today we'll be looking out for Nomura's profit, which may improve, is what the street is expecting. Singapore Airlines has already warned of a material operating loss in the June quarter, but the loss may have widened to about 1.2 billion is what Bloomberg Intelligence is expecting. Bharti Airtel is poised to further narrow its core loss as its Indian mobile average revenue per user is likely extended a robust double-digit growth is what the street is expecting. Eastman Kodak shares more than tripled on plans to secure a $765 million loan from the US government to help produce ingredients used in the key generic medicines to fight COVID-19. The money would provide a lifeline to the storied photography giant, which will repurpose its manufacturing sites under a new Kodak Pharmaceuticals arm. Now remember, in early 2018, they had announced a blockchain plan similar to what they're doing now. So shares jumped in a similar way but came back down as the year progressed. Stay cautious. Seems like they announce a business pivot based on the flavor of the market. Right? So something that we need to be careful about. On the FX side, we'll all be looking forward to the FOMC announcement later tonight. Generally, FX currencies would trade in tight ranges while we head into the announcement itself. But Federal Reserve already have announced that they are extending their 2 trillion plus lending program for another 3 months. So it was almost that they are front running the meeting itself. According to the central bank, they felt that it was necessary to provide certainty that the facilities will continue to be available to help the economic recovery. These actions send a strong signal to investors that come tomorrow we'll get a more cautious tone from Fed. We're not looking for any monetary policy changes, but with extra unemployment benefits expiring and COVID-19 cases rising, the central bank will be forced to look past the improvement in the economy since June. Powell and co. may take the opportunity to formalize forward guidance by linking the rate path to specific economic conditions, is what some people in Bloomberg have observed. Few weeks ago, Chairman Powell warned lawmakers not to become complacent as the US economy remains extraordinarily uncertain. Since then, the outlook has only worsened, extra unemployment benefits expired, and the packages that Congress are discussing could fail to impress. For all these reasons, expect nothing but ongoing dovishness from the Fed, along with the pledge to keep the monetary policy accommodative for the foreseeable future. Remember, last month they said the rates will remain at zero through 2022. The US dollar has fallen extensively ahead of the rate decision. Treasury yields have also moved sharply lower, which tell us that investors are positioning for dovishness. How the greenback trades tomorrow will depend a lot on Powell's tone and how the question answers are taken. That will be something that we'll have to look forward to. That's your update. Stay safe and healthy, everyone, and speak to you tomorrow.